Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Sonali Bassett counting you down to the closing bell and here to help take us beyond the bell. It's our global simulcast right now with Carol Massar and Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And Carol, we're looking at a market right now that is significantly higher on the day. Some of this does seem to be tied to the pause in the sell-off that we saw in bonds.
Yeah, absolutely. We were just talking about that with Rich Weiss over at American Century Investments. He said don't buy too much into it, that he doesn't anticipate that yields will stay low. Maybe this is just a short blip. He is concerned about inflationary things that are out there and inflationary factors. And what did he like, Tim? He liked small caps.
Yeah, he also liked cash. He said in the near future, cash is king, at least in this market environment. I believe his forecast was cloudy with a good chance of rain.
Cash is king?
That's what he said.
What about Bitcoin? What does that make Bitcoin?
We didn't have a chance to ask him about Bitcoin.
Oh, okay.
I want to ask Jack Dorsey about Bitcoin.
I'm sure. Is it going to be obnoxious?
Yeah, there's a bit of obnoxiousness in that story. That was a beautifully written big take coming from our own Kurt Wagner today. And overall, crypto is actually on the higher side, up by some 4 percentage points today, Romaine.
Wow.
Who'd have thought it? So
that's a rally.
That's a risk asset rally.
That's a risk asset rally.
And it's like the banks are the risky ones today. You have the S&P snapping a 4-day streak and the banks having no part of it.
Yeah, I mean, JP Morgan, second biggest decliner, I believe, in the S&P 500 today. To the upside, though, it is a lot of those tech stocks. A big part of the reason why you're seeing us in the green with the Apples and Amazon, the Microsofts of the world. I guess the big question going forward here, guys, is this the start of a new rally or just one of these sort of blips that we've seen over the last few weeks and then we just go back to a sell-off the next day?
Ooh, Mike Wilson bear market rally call there.
Ooh, there you go. Well, here are the closing bells here in New York City. It is an up day. We won't rain on anyone's parade here. The Dow Jones Industrial Average is going to finish higher by more than 300 points, up about 1% here on the day. The S&P 500, as we were just talking about, led by the Apples, Microsofts, NVIDIAs of the world, up about 1.1% or about 49 points. The NASDAQ Composite up 272 points or 2%. And we should point out that some of the cyclical names getting in on the action. Transport's up 2% on the day, as is the Russell 2000, higher by about 38 points or 1.9%, Carol.
Hey, guys, we're so domestically focused, understandably so, with so much going on and bank earnings starting. But I've been looking at the Golden Dragon China Index up about 3.3%. China officials coming out and saying that they will cut the amount banks need to hold in reserves as needed. So again, showing, Sonali, that they will do what they need to support the markets.
Yeah, absolutely, supporting the markets. And we're seeing that support here now in the S&P 500. Let's get you into the sectors a little bit because you do have major sectors, most of them in the green. You're led over to the top, 3% higher by auto, also followed by consumer services, retailing, semis. You're led lower by 3 sectors, and that includes banks and utilities.
All right, let's get to some of the gainers, Sonali. You just talked about the sectors overall. I have some specific names. The airlines definitely rallying today. We got some optimism or better news than expected from some of the players. American Airlines alone was up almost 11% in today's session, saying first quarter revenue likely down 16%. Sounds like a lot. That's compared to before the pandemic, but it was a slight improvement from its prior outlook. So again, some optimism also from Delta.
And they said they expect everybody to start traveling or flying this summer, right?
And paying up too, right?
And paying more for it, yeah.
Well,
you can tell what I'm stuck on with this, right?
But don't worry. Good thing gas prices are low. You can always drive.
It's definitely played out in the inflation numbers. We've seen that in the airline costs. Gap on my radar, up about 8.2%. I'm not quite sure why. It might be related to an unconfirmed report by an Activist Insight, which says an activist might agitate for changes at Gap, including a spinoff of Athleta. So that was playing out there.
Yeezy sweatshirts, that didn't turn around the company. Whatever. Mr. Kardashian, those sweatshirts. And
He's not that either anymore.
Yeah?
Romaine.
Okay.
All right. Gap is still down 17% year to date, and about 11% of the short is floated. Zoom up almost 8% in today's session, announcing Zoom IQ for sales. It's still down about 40%. So making an announcement, kind of leaning more into expectations that everybody's going to be hybrid. But I don't know about you guys, but I'm at the office working.
So am I, and so are the folks at JP Morgan Chase, right? They reported earnings earlier today, and a shout out to Sonali, who I know has been here since 4 a.m. Covering these earnings. The bank finishing the day down by more than 3.2%. Shares lower after the company reported a $524 million loss tied to market fallout from Russia's invasion of Ukraine. Adjusted revenue actually came in above estimates, but that EPS came in slightly below. Synopsys down by 1.3% today. This is the biggest supplier of software used to design semiconductors. Shares falling after a Bloomberg News article reported that the company is under investigation by the Department of Commerce for possibly passing key tech to banned Chinese companies. That, according to people familiar with the matter. And then PayPal down more than 2.8%, finishing the day lower after we learned that PayPal's finance chief, John Rainey, is going to leave to become CFO at Walmart. PayPal shares have just been getting killed so far this year, and down significantly from last year's highs.
Yeah, and we didn't really get much of a chance to talk about this on Bloomberg Television today, but I thought this was a huge change, a huge loss for PayPal. Obviously, a good gain for Walmart. Those shares gained on that. But you talk about a company, PayPal, that's really been trying to sort of transition, I guess, to the sort of new phase of the fintech revolution here, and losing somebody like that can't be good.
And let's now go a little bit cross-asset for a moment and talk about what has also been a confusing story to be keeping up and what phase of it we're in, and it's the oil story. Because today, I think the IEA adds its voice to the EIA, adds its voice to the OPEC view on where demand is going, and that's being pulled back, particularly as we see China once again back in lockdown mode. We see, though, actually oil pushing higher. Brent up 4%, $109, let's call it a barrel. We've got also WTI crude basically up 4 percentage points. Why? Because, well, the oil traders, the markets, see, well, actually an imbalance of supply-demand, unlike the likes of the IEA. So at the moment, oil pushes up higher above $100 a barrel. That, of course, feeding into the inflation picture that really dominated headlines earlier this morning. The PPI number roaring ahead from an 11%, but that's not just the only inflation reading. Think about what happened in the UK earlier today. We saw 30-year high in terms of inflation. We see the British pound up 0.8%. Will of course, its central bank, the Bank of England, have to become more hawkish. The Canadian dollar up because its central bank already got more hawkish. 50 basis point move in terms of the overall monetary policy coming from the Canada central bank. We up 0.6% on the loonie. You're seeing actually the Kiwi drop even as its own central bank got more hawkish to fight the impact of inflation. But it had already been factored in. And of course, all important tomorrow remain the ECB. We're just seeing a bit of trading ahead of that all important Thursday central bank meeting in Europe. We're up 0.5% on the euro as risk tone changed and the dollar actually fell some 0.3%.
Yeah, and I'm glad you bring up the ECB because the action, of course, here in the U.S. markets is really still tied to monetary policy. A lot of discussion here about where the neutral rate is, where the terminal rate is, and you're seeing, I guess, a pause in the sell-off in the Treasury market right now. 2-year yields higher here on the day by about 6 basis points. You're seeing the shorter end of the curve move a little bit lower here. The yields lower. Move a little bit lower here. And we should point out, though, that when you look at the differential, though, between the short end of the curve and the long end of the curve, we're still continuing to get that steepening here. The 30-year yield really went nowhere today. That was on the back of soft demand that we saw for an interest in auction. So you start to talk about not only where yields are going, but the idea that despite whether they're going up or down, at the end of the day, we're starting to see a steepening of that curve.
Yeah, but wild to see an easing in yields on that hot producer price index report. And that's just expectations that what longer term that everybody expects that the Fed's going to maybe be easing at some point. I don't know. It's kind of an odd trade.
Do you think that people think that maybe the Fed might actually be aggressive enough in sort of combating inflation? I mean, particularly when you look in light of what happened in Canada and the 50 basis point hike that you got there. And who knows what we hear from the ECB tomorrow, but there's a lot of expectations they could be a little bit more hawkish as well.
I mean, I want to happen because that point you just made there, it was something that Jamie Dimon was actually making, and that the Fed, the QT, will really impact what you're seeing on the curve here, and that idea that the 2-year is really facing some volatility, and they're not going to want to upset that short end of the curve here.
And we heard from Bullard once again advocating for a more aggressive Fed. We heard from Thomas Barkin, of course not a voting member over at the Richmond Fed, but he also made the case here for getting to that neutral rate, in his words, rapidly.
I think it's interesting to go from the macro to the micro, guys, and just fold in some of the optimism coming from earnings. Yes, we heard the banks, and the banks not looking quite as pretty as we expected with JP Morgan. I'm going to push ahead in a moment, but what's happening right here, right now is the runway, which is up, spiking after hours. I have to say, I do use it. But they're currently saying in the statement, Carol, this is what's interesting. We look forward to capitalizing on one of the strongest potential macro environments for rental we've seen in recent years. Outsized pipeline, social occasions, return to work, resurgence of general social activity. There, in case in point, is optimism, even though they see a strong progression even of their gross margins. They're managing to fight off some of those inflationary pressures.
I got to tell you, all the shorts are really kind of ticked off right now because all that optimism means they are running for cover. 51% of the float is shorted. But it is interesting to hear them be optimistic about the outlook. But contrast that with what JP Morgan said they're doing. They're increasing their reserves because of the expectation of a rising possibility of recession recession. And this is why it's so important what these CEOs have to say.
It is. And of course, when we look at, obviously, for Jamie Dimon, what he has to say,
Totally.
you look at a rent the runway, too, maybe for a little bit of an indication as to how much we are really getting back out there. People want to look nice. And I have to say,
You look nice, Romain.
oh, well, I appreciate it. And I have to point out, I went out last night. It was kind of the first, real
Did you
night.
invite us?
Well, next time. Trust me, next time. But I look good. That's all you need to know.
Maybe Rent the Runway is an inflationary play, which goes to show you the stocks don't need to all do badly in an inflationary environment.
Right, and maybe easier to rent, right? And then have some options, right, Caroline?
Oh, perfect segue for retail sales tomorrow, right?
Exactly. All right, guys, we got to run. That'll do it for our cross-platform coverage on radio, TV, and YouTube. We'll see you again, same time, same place tomorrow.